and welcome to The Global View, the show where we look at ways for investors to make money beyond the ASX-listed universe. I'm your host, Olivia Grace Curran. It was a mixed session on Wall Street, with the Dow closing slightly in the red, while the Nasdaq marched higher, boosted by shares of Nvidia and fears of whirlwind tariffs threatened by US President-elect Donald Trump eased. The tech-heavy Nasdaq and the bellwether S&P 500 gained, while the Dow and Russell 2000 ended lower. Each of the magnificent 7 megacaps ended green, with Meta and Nvidia dominating. Car makers Ford and General Motors benefited following reports that US President-elect Donald Trump's tariff plans may be less aggressive than expected, while shares of Walt Disney fell after announcing it would merge its Hulu and live TV business with smaller rival Fubo TV. Ulta Beauty finished up after appointing a new CEO and raising its Q4 forecast, while Canada's main index edged higher, powered by gains in energy and tech stocks, as investors braced for political changes after Prime Minister Justin Trudeau said he would resign as Liberal Party leader. President-elect Donald Trump has reacted to the resignation of Canadian Prime Minister Justin Trudeau by pitching the idea of a merged United States and Canada. Trudeau on Monday announced his intentions to step down from the helm of the Liberal Party, which is polling poorly as tensions with Trump rise over the issue of tariffs. Following the news, Trump posted on his Truth Social platform saying the merger would be beneficial for the US because it would no longer suffer from massive trade deficits and subsidies that it provides to Canada. Trudeau says he will stay on as Prime Minister until his successor is chosen. It comes after reports suggested Trump's tariff policies could be less powerful than initially planned, applying to all nations but only focusing on a select set of goods and services. Trump, meanwhile, hit back, denying he'd be paring back his tariff policy. Meanwhile, Michael Barr, the Federal Reserve's top banking regulator, announced he'd be stepping down on February 28, though he will stay on as governor. US 10-year yields rose 3.3 basis points to 4.6%. 2-year yields were up 1 basis point at 4.28%. The Treasury is this week selling $119 billion worth in coupon-bearing supply. The US dollar dropped as much as 1% against a basket of its major currencies on Monday after those conflicting reports of Trump's tariff plans, but sharply reversed after Trump denied the report. While Bitcoin has leapt back above $100,000 to start the first full trading week of the year. Well, Trump has denied that Washington Post story I just mentioned, saying his tariff agenda won't be as aggressive as initially reported, but investors seem to want to believe it. European and world equities rallied on Monday and US stocks rose for a second day. Joining us now to unpack the details is Steve Sosnick from Interactive Brokers. Welcome, Steve. Happy New Year. What have you made from all this noise regarding tariffs?
Well, good morning, Olivia. It's going to be something that's going to be difficult to unpack until they happen. I mean, we don't have the inauguration for another 2 weeks, actually literally 2 weeks from today, which actually, interestingly, is a market holiday, Martin Luther King Day. So it'll actually be the fourth week in 5 that we have a 4-day week, oddly enough, because of the unexpected President Carter funeral on Thursday. And so I think the market has to wait and see. And it was interesting because one of the reasons that we thought the market was rallying this morning was, that there would be, I'm going to call them more targeted tariffs. They would still apply, sort of across the board to most countries, but in a more targeted way. And then that was, in no uncertain terms, denied by the president-elect. And it was interesting because if we were really rallying because of the tariff news, well, then we should have reversed when the tariff news was shot down. And as you mentioned, currencies did have that reversal. I've said this many times, that equity traders don't really care about geopolitics until it affects them, or even politics until it really affects them. And so it was much more about the Mag 7, as you mentioned in your lead up, than it was about anything to do with the tariffs or anything else. I think the stock market right now views them as an inconvenient piece of noise, even if bond and currency traders are dealing with them a bit more in a concrete fashion.
And we also got overnight confirmation that Canadian Prime Minister Justin Trudeau will be stepping down. How have markets reacted to that?
In the US, another unfortunate truism is US traders are really good about ignoring things going on in the rest of the world, even if they literally are happening, next door. Canada, I could be in Canada in not less than an hour on a plane, but as far as, and I actually ran our Canadian operations for many years, our trading operations. But for the most part, when it comes to what goes on in another country like Canada, it again, we're so top heavy with mega cap tech stocks that yes, there are certain sectors, there are certain companies that obviously pay attention when the leader of one of our most important trading partners steps down. But you could sort of say the lack of reaction is number one. Most Americans don't understand the parliamentary system because we don't have one. And secondly, you know what? What did that have to do with the price of Nvidia today? Jensen Huang is talking in about an hour. What Justin Trudeau is doing is not top of mind for U.S. investors, like it or not, even though it really is quite a significant event.
And the key event of today is happening in an hour. Tell us what that's all about.
Well, I mean, there's certainly the enthusiasm about Jensen Huang's speech at CES. The stock, let's not lose perspective. The stock is up 10% in 2 days. That to me tells us much more about the mindset of investors being bargain hunting, momentum trading, and FOMO. So unpacking this, we had, you know, Nvidia sort of found its level around the 135 number, which had been a bit of a pullback from the highs. So it had been a little bit lower as well. And last week it held relatively steady as the markets had been declining. And then, of course, Friday's rally happened, and off we went. We broke through some short-term resistance, and then today we broke through another level of short-term resistance, and off we went. So, what it means when you have a $3.7 trillion company that moves 10% in 2 days, based on what the chairman might say, you have to ask yourself: is what he's going to say worth $370 billion? Probably not. But that's the mindset the market has right now. And we'll learn soon enough whether this was, a buy the rumor, sell the news type of event, or whether there is something significant coming down the pipe. It's not necessarily a place where a major tech CEO is going to announce some big new development, but presumably he'll say some positive comments about the company. The question is how positive and how much of that is priced in. It seems like a lot of it is priced in a very short period of time. But again, this is the market we're in, and this is the mentality we're dealing with right now. Nobody wants to miss a rally. It's FOMO. Fear of missing out is still huge, and momentum. And anytime you see the biggest, slightest whiff of positive momentum, people jump on the back of it, and that's what we've been seeing.
And we also saw those semiconductor stocks rise off the back of that news from Microsoft that they will plan to invest 80 billion US dollars into the AI-enabled data centers in FY25.
Yeah, I mean, here's the thing. The semiconductors are the beneficiary of the AI craze because ultimately, if you're going to build out an AI data system, you need it. Secondary one that took a little bit longer to catch on to is the utilities because they need immense amounts of power. But you have to put in perspective: is anyone actually? Where does this come down to the bottom line? I've read some statistics today that each search you do on Google or on Bing basically costs the company 10 times what a non-AI powered search costs when you factor in the energy and the computing power that's required. So ultimately, you have to wonder, nobody wants to be left behind in this race, which means that there will be ever increasing demand. I shouldn't say ever increasing, but there'll be continual demand for semiconductor chips. As long as this gold rush is occurring, these are the picks and shovels of the AI mining. But what it really comes down to is at some point, is there a bottom line benefit to these companies? And Microsoft is telling us, at least for the short term, that either they see bottom line benefit, or at least certainly they don't want to be caught flat-footed when it comes to its competitors.
And as you mentioned, it's another shortened week with the funeral of former President Jimmy Carter on Thursday. How do you expect traders to act in the next 24 hours, 48 hours?
Well, I think a lot of it will. I could give you a better answer in about an hour when we hear what Jensen Huang has to say, as to see whether this tech rally has legs. I think a lot of people were disappointed by Santa Claus not making a real appearance at the end of the year. I think there's not a lot of major economic news until Friday, when we have the weekly jobs report. And that is almost always a market mover. So I would expect, if things just sort of are traded rationally, that we'd see some position squaring and we'd see ourselves consolidate the recent gains. If there's some new euphoria, well, off we go. Also, it's important to bear in mind that we have the 3-year auction today, as you mentioned at the top of the show. We also have a 10-year tomorrow and a 30-year on Wednesday, and a lot of corporate supply that's getting compressed into a shorter week. So I do think that we do have to be keeping an eye on the bond market to see whether it can handle all that supply. It didn't particularly love the 3-year notes today. And then, of course, there's the secondary factor: is, do stocks actually care about bonds? Because we'd all heard that 450 was a problematic level for the 10-year, and now we're over 460, and it didn't seem to matter Friday and Monday. So again, what should happen probably is some consolidation, barring any major news out of CES. What will happen will really depend more on the willingness of traders to persist in the momentum trade that they've come to love, and that returned on Friday.
We'll be watching what happens. Thank you so much, Steve. Steve Sosnick from Interactive Brokers. And just before we go, getting one final check on where the local market is set to open when trade gets underway. SPY futures are up 12 points. That does it for this edition of The Global View. Stick around, the Open is coming up next.